Here is a number that should stop any Bitcoin holder in their tracks. On one widely watched prediction market this week, the odds of America's biggest crypto bill clearing the Senate sat at just 23%. Today, Friday the 7th of August 2026, OKX's Rafique has gone public with the same doubt, telling CoinDesk that the Digital Asset Market Clarity Act probably will not pass, and that the good news is already sitting inside Bitcoin's price. That second half is the part traders keep missing. Priced in simply means the market has already bought the rumor. So if the bill does pass, Rafique argues the rally would be modest at best, because the buying happened weeks ago on the expectation, not on the outcome. So what actually changed? Clarity would divide oversight of digital assets between the Securities and Exchange Commission and the Commodity Futures Trading Commission, finally settling who regulates what. Its problem is not economics, it is the calendar and the politics. The Senate is staring at a tight deadline before its summer recess, and reporting this week links the delay partly to a dispute over ethics provisions involving President Trump. Prediction market pricing has whipsawed as a result. One contract slid to roughly 25%, then 23%, while a separate market on the bill being signed into law at some point this year was reported leaping from 60 to 90%. That gap is revealing. Traders increasingly think the bill arrives eventually, just not on this timetable. You can see the hesitation in the tape. Bitcoin's recent bounce was driven in part by exactly this legislative optimism, which is precisely why the warning matters. If sentiment was the fuel, a stalled bill removes it. XRP has been notably exposed, softening alongside Bitcoin while markets wait on the White House review, and spot exchange-traded fund flows have been mixed rather than convincingly positive. That suggests institutions are hedging rather than committing. For ordinary UK investors, the practical effect is a market that jumps on a headline and hands it back within days. Meanwhile, OKX has scheduled the delisting of GODS, PRCL, and DUC spot pairs, a useful reminder that thin, illiquid tokens are always the first things cut when risk appetite fades. The near term hinges on that recess deadline. If the Senate departs without acting, clarity slips towards the autumn and the priced-in optimism has to unwind, which typically means a slow drift lower rather than a dramatic crash. But there is a serious counterargument worth weighing. Bitwise Matt Hogan has argued that regulators are not standing still. Joint guidance from the SEC and the Cftc, combined with sheer industry momentum, can deliver much of the practical clarity firms need without a single vote in Congress. That is the scenario most people are underpricing right now. Progress through agency rulemaking is slower and far less headline-friendly, but it is also much harder to derail with a political row over ethics language. So here is the lesson. Do not trade the headline, trade the gap between expectation and reality. The argument is not that clarity is bad news. It is that hope has already been paid for at today's prices, so the upside surprise is limited while the downside surprise is not. Watch three things over the coming days: whether the Senate moves before recess, whether those wildly divergent prediction market odds start to converge, and whether ETF flows turn decisively positive. If regulators press ahead regardless of Congress, the longer-term case survives intact. Just be honest with yourself about what you are actually buying at these levels.